Chicago at the CME Group. Scott Gecas is here. Scott, first of all, what's the volume like there today? What about the activity level?
Yeah, the volume is going to be light all day today. It would be very shocking if we get a pickup in volume tomorrow. So the volume is going to be light. You know, when you have these light trading volume days, you got to be very careful because any type of decent size order can swing them one way or the other. So it's really hard for technical traders that are just trading off of levels to have a clear picture of what's going on just because of the light volume. You can get one thing that breaks a technical level and push it, and then it starts piling on and pick up a little bit of volume. But right now, it's really hard for technical traders just to get any type of order flow or any type of direction one way or the other.
Scott, we'll have a brand new decade. We'll finish out the rest of the week. We'll have a brand new year. And do you think that could lead to maybe a new attitude over here in the grain complex, especially given the fact that we have the world supply and demand estimate that's going to be released in January 10th?
Right. So going forward, we're waiting on this phase one deal being signed early next week or so. So if that happens, which is expected, but if it doesn't happen, we expect all kinds of fireworks to go back and forth. But yeah, most of the people that we're talking to, the traders and farmers, are looking for that January report for some type of direction. We should get some clear picture of which way we can expect things to happen. But moving forward, looking at the different weather patterns, we're looking at the weather patterns being similar to last year, which was not a very good year, and it caused a lot of issues for a lot of the farmers moving forward. So we have to wait and see how that's going to play out. We're focusing on that January report as well as weather in South America and Brazil. That's with the rains coming in over the next few days. That's going to limit the bean rally, and it's going to put a little bit of pressure on some of the other markets.
Well, can we take any cues today in this market from the calls and the puts?
From last week, we were looking at the option skew for the beans being very strong to the call side, which is expected, seeing that we've been strongly higher for the last 5 days straight, and we have another rally today. If we close today, it's going to be 6 days in a row with straight up moves. So that's the reason for the upside call. Now, the call skew in the beans in alone is roughly around $4. That's definitely high premium. That means that the market is expected to move a little bit higher. But with the light trading volume, you can always take all these volume numbers and option flow with a grain of salt.
Okay, Scott. We'll be back in a moment. We'll talk about the livestock trade straight ahead. Don't go anywhere. We've got more coming up right after this. To the trading floor we go. They're in Chicago on LaSalle Street, and Scott Gecas is here with us. What about the attitude over here in the livestock complex? Do you think that it's slowly evolving, led by the cattle market?
Yeah, I think so. So we have a lot of different things moving on with the protein complex. For the cattle, everything is going to go with what the cash trade is. Everyone I've been talking to, we're strictly focusing on the cash. If we start seeing a little dip in the cash, we expect to see some liquidation. So the demand is there. We're going to run into some short-term supply concerns, a little bit of oversupply. Whether or not the market can handle that, we're going to have yet to be seen. But overall, the cumulative sales are still up 7% versus last year, which is very good, very strong. So we're going to continue to see that uptrend in cattle until we see a break in the cash. Now, if you flip over to the other side, it's all going to be determined on what is going to happen with the trade war talks. If the phase one deal gets signed, we expect the import campaign to continue. The outstanding sales for 2020 are already up 314% versus last year. Whether or not they're going to stay, whether or not we're going to see cancellations, as yet to be seen. But the protein complex right now is very strong uptrend. I expect that to continue until something changes outside of the market forces. If we get some outside factors pushing pressure on it, then we can see a little bit of downside momentum. But until that happens, we expect that protein complex to remain strong.
Scott, what are you hearing from your fellow analysts? Is everybody pretty much anticipating that this phase one deal will get signed here probably within the next week or so here at the beginning of January?
Well, that's what everybody is expecting. So that's what happens when everybody expects something. When you see that expected event not happen, you're going to see a lot of fireworks. And if that phase one doesn't get signed, I expect all the markets across the board to be affected one way or the other. But moving forward with the hog park complex in particular, I mean, it's very interesting because we still have a lot of funds that are still net long. SPEC is net long. However, if you're looking at the option skew, the option skew is definitely toward the downside. The puts are holding a lot more premium than the upside calls. So that just tells me that it's not a for sure thing. It's just wait and see what happens. But the way that it's looking right now, it's definitely set up for a little bit of protection mode right now.
All right, Scott, thanks a lot. Always appreciate it.